Morning, everyone. Welcome to the TradeStation Masterclass. Today, we're going to talk about strategy elements. And one of the things that I want to highlight in this class is a lot of the strategy exit components that are available on the TradeStation platform. It's always good to have an idea of what's built into the TradeStation platform. Some of the things don't have to be created from scratch. So we're going to take a look at a few strategies that are already designed and programmed so that it allows you to exit your positions. If you want to do it through an automated process, it's up to you. But at least you can have a strategy that is monitoring your position and giving you an alert if something needs to happen. Okay, so before we get started on today's topic, let's go ahead and go through some of the disclosures. Just keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, that active trading is not suitable for everyone, and that past historical performance is no guarantee of future results. Today, I'm not sure if we're going to be looking at the strategy performance report, but if we do, just be advised that whatever results you see there are just for demonstration purposes. That's not a guarantee of TradeStation. Also, all the risk disclosures are on this disclaimer. You can go to www.tradestation.com/important-information if you need a little bit more details. For those that don't know me, my name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. And one of my main goals and objectives here is to make you be aware of everything that's available on TradeStation and help you so that the learning curve is not as tough as it sometimes is. Okay, so let me go over here to my TradeStation platform. Right here on the screen, I have a chart of Verizon and it's set to a daily chart. So the symbol and the time frame don't really matter in this class because we're going to highlight on strategy functionality and how you can use it on your platform. So let's go ahead and see, first of all, before we do any strategy development here, let's go ahead and see if we have a position open on Verizon. I can check that if I have account orders and positions turned on. There is this feature on the TradeStation charting that as you trade, you can see your entries and your exits, and you can see your position information. My chart is turned off on that feature, and that's why even if I had a position on Verizon, I wouldn't be able to see it because I have that feature turned off by default. I turn it off just because whenever I bring up a chart, I like to have a clean slate, no studies, no trading information. And if I ever need to see that information, I can always turn it on, okay? So settings, account orders and positions. And let me go ahead and turn the status on for Verizon. This will connect my Verizon chart to my trading account and see if there's any trading activity. There's a checkbox that I unchecked right here at the bottom. This is the one that disables the functionality, and every time that you open up a chart analysis, won't have any trading activity. So that's the one that I keep off. I'm going to click OK, and here we go. We have some trade activity that happened, a few weeks ago. This one is older. This one is from February. But we have some position information. If you guys see over here on the right-hand side, you can see that I'm short 1,500 shares of Verizon. And this is currently generating a loss of $562, okay? So maybe I want to set some sort of protective stop or some sort of a target here. If it continues to go up, then I may just cut my losses and do away with this short position. So how can I manage this trade using strategies? I know that I can set a fixed, kind of stop loss up here. So and say something like, okay, if it goes up to $39, then get me out. I can just send that order straight from an order entry tool like the trade bar or the matrix or even chart trading. But sometimes, calculation of exits may be a little bit more intricate, at least in your mind, and you're trying to figure out how can I introduce some technical calculations into my position. So let's go ahead and take a look. Let me go here and add, before I even add the strategy, let's go ahead and add some moving averages. So I'm going to go here to moving average to line. Let's go ahead and take a look. Something simple, something quick, and something that is built in. All right. So you can see that my moving averages very recently crossed over. So because I was looking in this particular example, I would say, well, if my moving averages cross, in this case, this cross is indicative of a bullish signal, and my position is a short trade. You can see that I'm short 1,500 shares. But if I get a bullish signal on the moving averages, I would have wanted to close out this trade, which is the way that I'm thinking about using technical ideas to exit, trades if we had to. Let me go over here to an intraday chart. This is the daily chart, of course. But let's say, for example, that you're more into intraday movement, and let's go ahead and take a look. I'm going to go here to a 60-minute chart just to take a look. All right, so a bullish signal happened, a couple days ago. That would have been a good signal to get out of. If you look at my entry happened back here. This is March 22nd. A few days ago, I shorted 1,500 shares of Verizon. The market went in the direction that I wanted, or the direction that favored my position. In fact, you can see how the moving averages go in line with my position. So this is a bearish signal. But all of a sudden, there's a turn in the market. The candles start going up. The moving averages cross, and this would have been a great place to enter that exit. So let's go ahead and start from scratch, and maybe not try to find a place where I could have exited this. It seems like for this short trade, it seems like the markets has been turning up, at least for Verizon, and we don't have a setup that I would like to use here in this example. So what we're going to do is, let's go to something different. Let me go here to, this is Coca-Cola. I don't have a position on Coca-Cola. Coca-Cola is trading at $61.53 right here. I'm going to enter a trade, a manual trade. So I'm going to go here to my trade bar. Let me pin it to the top of my trade station, and I'm going to buy 1,000 shares. I'm going to buy 1,000, so the mathematical calculations when it comes to profit targets and stop losses, it becomes easier. If I were to trade an odd number of shares like 275, all those mathematical calculations are harder to do in my head, and I would have to use a calculator for that. But 1,000 shares, it's a number that I can work with in my mind, and we can calculate profit and losses. So let me go over here and do a market order, because I want just to show the position. Order filled. All right, I'm not sure if you guys heard my computer, but I see my position up here. That yellow line represents my position. I have 1,000 shares of Coca-Cola, and right now it's losing money. It's a $7 loss, but the moving averages a couple days ago entered into a bullish setup. I'm not sure how long this bullish signal is going to remain in effect. There may be a downturn on the market, and of course that's going to be reflected in the moving averages. As soon as the moving averages start getting closer to each other, and as soon as we have that crossover of the cyan over the magenta, we're probably going to get a bearish signal on the moving averages, and it may be time to get out of our trade. So I can use the crossover of those moving averages as a protective stop. I can also, monitor my position with a profit target if I wanted to, but in this case, I'm more concerned over the moving averages exit. How do I set that up? How do I set my position up so that it exits my 1,000 shares if the moving averages cross? Well, the first thing we need to do is find the strategy that can do that. I'm going to go here to studies. I'm going to click on add strategy. And the strategy that can do that is a strategy with the name of the same study, moving averages cross. And we have multiple instances of the strategy with different letters at the very end. One is an LE and the other is an LX. The LE stands for long entry, and the LX stands for long exit. All right, so we have the short exit right here if you wanted to exit a short position. So the strategy that I'm interested in is this moving averages across LX, which is a long exit, because I have a long position and I want to exit on the moving averages cross. So I'm going to put that strategy in. In here, there's a couple of things that I need to do, and this is something that you have to do if you want to connect the strategy to what's happening in your real account. Well, this is a simulated account, but still, this is a trade that I entered manually. And just think about all the times that you enter positions manually, and then you want to manage that trade using a technical exit. How do I do that? How do I connect this strategy that I'm adding to my chart to my real position? Well, first of all, I need to go in here, properties for all. I'm going to have to go here into the automation section. This is something that we talked about in one of my, I'm not sure if it was one of my master classes or one of my Art of Trade stations, but it just comes to mind that recently I went over all the settings in here in this particular dialog. So in the automation section of strategy properties, we have to select this second radio button that says strategy will fill non-historical orders only when the trade manager reports them as filled. And we're going to check the box that says adopt the real world position for the current account. This is the setting that I'm looking for. And what it does is that it's going to adopt whatever position you have in the real world as if it was generated by the strategy, which is key in combining a strategy with a real position. You have to let the strategy know that you want the strategy to adopt whatever position you have. So by checking this, the strategy is going to realize that I have 1,000 shares of Coca-Cola, and whatever strategy or whatever exit is going to be triggered off of that position. I'm going to click OK to that. And in addition to doing that, I'm just going to turn automation on. This will connect my chart to the trade manager so I can see any orders if they're generated. And I'm going to automate the execution, agree with confirmations off. Okay, and I'm going to click OK. All right. One of the things that happened here in the strategy, and I want to point this out, is what you see here on this current candle. Let me open up my chart so you can see a little bit more of that. There's two blue arrows. I'm not sure if you guys understand the difference between the two arrows, but if you look at them, you're going to find that the arrows are a little bit different. One has a rounded edge. So they are both arrows, but if you look at the opposite extreme, one is a regular, squarish type of end, but the other one is a rounded end. I'm talking about the one at the bottom has the one that has a rounded end. The one that has a rounded end, it's a real trade signal. Whenever you put in real trades, you're going to see that rounded bottom or the rounded top on the arrows, whether it's a short trade or a long trade. The ones that don't have that rounded bottom or top are strategy signals. And you can see that on this particular bar, the current 60-minute bar, we have two of them. Why? Because I'm sure if you guys remember, but I entered a trade manually to buy 1,000 shares of Coca-Cola, and that's the one that is rounded. It's showing me that I bought 1,000 shares. Now the strategy signal says assume, LE. Assume is the adoption of my 1,000 shares by the strategy. So now the strategy is saying, okay, I found that you have 1,000 shares of Coca-Cola. What I'm going to do is I'm going to adopt it as my own position and show you a signal for it. That's why you have two separate arrows with 1,000 shares in the label, letting you know that you are long 1,000 shares, not only in your real account, but also in strategy-wise. Okay, so that goes along here. Let me pull up a trade manager window to see what the strategy status is. I'm going to come over here to apps. I'm going to click on trade manager. All right, let me go ahead and take a look at strategy positions. In the strategy positions, Strategy positions, I only have one row of information because I only have one chart. If you had multiple charts with multiple strategies running, they would all be listed here. But you can see that the symbol is Coca-Cola. Strategy positions long 1,000 and open position is long 1,000. So they're both long 1,000, the strategy and the real position. So there's a position match that is true. If I go over here to my strategy orders have not generated anything. The reason for that is because the moving averages have not crossed. If you guys look at a chart that I was just on, I just need to click on this other tab here. Yeah, the moving averages are really far away from each other. If you guys think about the condition or the criteria of those moving averages is that whenever they cross is the time when an order is generated. If I go over here to my strategy, I'm going to go to edit strategies. All right, I have my moving average cross LX. I'm going to click on edit easy language from this menu, which will open up the code of that exit that I just added. And you can see that in the condition, it says if price crosses under the average, this is not the one. This is the moving average cross. This is not the one that I wanted. The one that I wanted is the one that had the two lines, because I just realized that this is if the price, which is the closing price, crosses under the average, that's your selling transaction. It's okay. Let me go ahead and fix that so that we are on the same track. I'm going to go here to studies, edit strategies. I'm going to remove the strategy that's in there. So notice that it removes everything. So the assume and everything is cleared out. I'm going to go to studies, add strategy. The one that I wanted to add is this one. Moving average to line cross, but we only have a long entry and a short entry. Let me show you a trick. In this case, I want to use the criteria. See if I can do this. Short entry. Because the criteria for the short entry is whenever the cyan crosses or the fast crosses below this low. That's a short signal. So I'm going to use the short signal for the short entry, but I'm going to turn it into an exit. It's a little bit more complex. Let me show you what you can do. Let me add the short entry, because I mean the long entry is just when you get a bullish signal, and I don't want the exit on a bullish signal. I want the exit on a bearish signal because the prices, there's an indication that the prices are going to turn down, and I'm going to close my long position. That's the idea here. So I'm going to use the short entry criteria, but instead of entering the market, I'm going to exit. I'm going to add it. You can see right here, before we even go anywhere else, that there's a little column that says sell short, and that piece of the strategy is turned on. For every strategy that is built into TradeStation, you have a way of going in there and changing the behaviors. Instead of selling short, I want this strategy to exit only. So the options are off, on, or exit only. So a lot of times you don't have to remove strategies. You can disable them by just turning off its entry or its action component. In this case, I'm going to be using the same criteria of the short entry, which is whenever the fast crosses below this low. But instead of entering the market, I'm going to use that same criteria to exit. So we're technically changing the behavior of that strategy. We're going to come back here to properties for all. Again, automation. Remember that we had removed the strategy. So when you add a new one, all these settings are reset. So you have to come back here and set them again. We're going to adopt the real world position. And I'm going to do the automation part as well with confirmations turned off. All right, I'm going to click OK. And let's see what happened here. So this has the strategy is unable to exit the current real world position. Strategy automation has been disabled. Unless there is something in the software, maybe this is something that I'm realizing at this moment as we walk through this exercise, that the strategy that I'm using cannot be turned into an exit only, because it only applies to strategy generated order. So what this is trying to tell me is that what you're trying to do, mix a strategy that is designed to enter the market, but you want to exit the current real world position. That's something you cannot do. Well, let's try it one more time. Let me go over here, go into studies, edit strategy. That I think that's what's happening. The fact that this is a strategy that is designed to go short, like enter a short position, and we are changing the behavior of the strategy, but not in easy language. We're changing it here in the front end, and I think this cannot be mixed with adopting a real world position. So let me go back in here, automation. If I do it again, I'm gonna get that events log. All right, let's try it one more time. Confirmation off, that's fine. So yeah, I get the same events log. So this is something that I cannot do with that particular strategy. So let's go ahead and think about this, because if I wanted to, maybe let's do something. Okay, so I entered the trade right in here. Let me go into a 30-minute chart, even lower, 15 minutes. All right. So we have a 15-minute, let's go to a 10 minutes, see if we get closer. I just want to find a way. I mean, we're really close to crossing here. One possible way of doing this, and maybe I'm overcomplicating this just because I want to use that strategy, is using a strategy here in TradeStation called historical entry. I don't talk about that strategy much here in my classes because it takes a little bit to set up. Let me show it to you. I'm gonna go to studies, add strategy, and towards the top, look for underscore historical entry. So the thinking process here is that if I cannot use a short entry strategy and turn it into an exit strategy like I'm trying to do, my thinking process is that I can trick the strategy into thinking that it has an entry that it was generated by the strategy, and then I can turn it into, and I can use the behavior that I showed. I guess it'll become a little bit more clear as I walk through it. So this is underscore historical entry. It is a strategy component that allows you to create a historical entry. Let's go ahead and click OK. But I need some information. Let me go ahead and highlight it and click on customize. I need the entry price, which I have it here, 61.53, so I can enter it right away. 53. All right. The quantity is 1,000, long or short. So if I hover over the input name, it says enter number of bars used. Oh, this is not. Enter an easy language expression to use. This is odd because this is giving me moving averages definitions. I'm gonna have to look at the code here for a moment. Oh, okay. So the entry price is 61.53, the quantity at 1,000. I know that long or short, 1 is for long, 2 is for short, I believe, or 0. So I'd have to look at the easy language just to be sure, but I think 1 is going to be a long trade. Previous bar date, you need the previous bar time, the previous bar time seconds, and the open of the price, or the open price of the entry bar. That's where it gets a little bit complicated. So I need some information here from the previous bar, the date, the time, and the seconds. That's interesting. So they may have made modifications to this strategy already. Okay, so date and time. Let me go ahead and cancel out of this and close because I need to check the time here of the previous bar. The previous bar is March 28th, today's date. The time is 11:00, and the seconds are going to be 00. I guess the seconds come into play when you have more like tick charts. That's when you have seconds on the charts. But on this one, the seconds would be 00, if I'm not mistaken. And we need the date and the time of this bar, and we need the price or the opening price of the entry bar. The opening price here was 61.42 is the opening price. Okay, let's go back in there. Studies, edit strategies, historical entry, customize. So 61.53 is the entry price. The opening price right here is 61.42. The time is 1100 seconds. I believe there's 00, and the date is going to be, the year is, so the date says year. Let's see if this works. The date is going to be 23, which is the year. Month is March, and the date is 28. Let's see if that works. I'm gonna click OK and close. There you go. Everybody sees right here on this bar where we had the market order for 1,000. Now we have double blue arrows, because now the strategy says, okay, I'm able to put in a historical entry right there. So that buy 1,000 that you see there, it's the strategy that I just added. Okay, so now let's do the next step, which is I'm going to go here to studies, edit strategies. I can use my moving average 2 lines short entry. All right, let's see if it's still set to exit only on the short side. Let's see if we can use this setup now. Let me go here to properties for all, automation. That's selected. I'm going to click OK, and I'm just going to turn automation on. And there we go. So now I didn't get the event log, because now I kind of simulated my entry with a strategy entry. So use that underscore historical entry if you ever need for the strategy to have that entry duplicated on your chart. Sometimes that helps you if you want the strategy to then take that entry and do an exit. Let me go here to the trade manager to make sure that we are in sync. Strategy positions. Okay, so now the position match is true. We don't have anything on strategy orders. The strategy is not getting ready to place any trades yet, because what it's doing, it's just waiting for the 2 lines here to cross. If we look at, now this is where I wanted to look at the easy language, just to give you a view of the calculation. If I go to edit strategies and I select that moving average 2 line cross short entry, let me go to edit easy language here from this dialog. And the condition is if the fast average crosses under this low. That's exactly what we talked about. The fast crosses under this low. That's a bearish signal. Then it's going to sell short next bar at market. But in this case, instead of selling short, it's not going to enter, because we changed the behavior of the strategy. It's just going to exit only. So good that we were able to figure this one out. You know, sometimes if I get anything that is an error on the platform, I always use an opportunity to show you workarounds, because a lot of times you're going to find yourself facing errors like we just did, and having that capability of going around it is always very useful. Okay, let me go ahead and undock my trade bar. That's it for this one right here. Let me go back here into a daily chart. Let me go to studies, edit strategies, and remove this. Remove. Close. All right, so I've removed the strategy. I've left my indicator in here. Let me show you a few more things. I have my position open. Let me go to studies, add strategy. There is another one that's called stops and targets. That is one of the strategies that is built in that you can also use as a way of monitoring your position and having different scenarios. Let me show you exactly what I mean by that. Let me go and I always click on definition, and this is something that I want you guys to be familiar with, because definition gives you a synopsis of what the strategy is designed to do. Not only that, but it also gives you a description of every parameter that you can adjust. Let me go ahead and open up definitions so that I can see the inputs. Here you can have an explanation on each one of the input parameters. Let me go ahead and add it, and then click on customize. As you can see, there's different ways that you can exit using this strategy. The first parameter right here on this list of inputs is position basis, which is important for us to determine how is it that we're going to calculate our exits. Are we going to think in terms of the overall position, or are we going to think in terms of a per share movement? Like, for example, we know that we entered at 61.53. So you probably are saying, well, if it goes up 50 cents, I want to get out. 50 cents on a 1,000 share position, we're talking about $500, right? Yes, I was just trying to do the math in my head. $500. So, but you're thinking in terms of movement per share, 50 cents per share. That's the way that some traders like to think or like to calculate their stops and targets. But if you think in terms of dollar amount, like if, for example, if you had said, well, I want to capture at least $500, then you can set those amounts as a dollar amount by changing this first input, which is called position basis. It determines what is it that you're going to be using for the calculation basis. And if it's set to false, it means that it's not based on a position, it's based on per share. If you want to base it on the overall position, we just turn that parameter to true. I'm going to leave it on false because I'm going to be thinking about movement per share. And you see that the ones that have a value from the beginning are profit target and stop loss. The stop loss is set to $1 and the profit target is set to $5. I'm not going to change those yet. I'm going to leave those parameters the way they are. I'm just going to click OK there, and I'm going to generate automation. And let's go here to properties for all, because remember that the strategy doesn't have an entry. We need to adopt the real world so that the strategy can see the 1,000 shares that are in my account. Always remember to do this if you're not using an entry strategy. This is a strategy that's based on exits only. I'm going to click OK to that and then click on close. So we get the double arrows here on the current bar. The strategy assumes my 1,000 share position. Let's go ahead and take a look at the exits. So let's go here to my trade manager. All right. And here are the two orders. You can see that in a profit target and stop loss kind of setup, the two orders are generated. This is the strategy order step. So this is the strategy keeping an eye on your position. Notice how the quantity is set to 1,000. The symbol is Coca-Cola. Confirmations is turned off. So this would be trades that get executed automatically. Both of the strategy orders are active, but one of the orders is order status canceled. Don't be thrown off by this, because the strategy has an engine that decides which one of the orders are going to be sent and at which time. If you notice, the one that was sent was the one at $60.53. So it's monitoring the stop side before it monitors the target. The target here is 66.53. Now, where do these prices come from? Well, they're exactly $1 from entry and $5 from entry. If we think about this, let's go back here to the chart. You guys remember that we entered at 61.53. So it makes sense that the stop would be at $60.53, exactly $1 away. And this other order that you see here in orange was calculated, but it's not sent because it's too far away. Yes, the engine makes a decision as to when the order is sent. Right now, the stop is the one that is active, but if the market moves and gets closer to my profit target, then the strategy engine will make a decision as to which one to send. And it'll probably send, that profit target if it's getting closer to that $66.53. Does that make sense? So you can see that I'm monitoring a manually entered position with this exit component, which has other types of entries. Let's go there and explain them. I'm going to go here to studies, edit strategies, customize the strategy. In addition to having a profit target and a stop loss, you can also set something called the break-even floor amount or currency trailing amount, or percent trailing floor amount, percent trail percentage, and exit on close. The behavior of each one of this is going to, of course, change depending on what value you put in there. If you want to turn off any component, you can say, well, turn off the profit target, turn off the stop loss. Let's do the break-even floor amount. Let's say that I want, what's the current price here? The current price is 61.69. So let's say the floor amount is the minimum profit that needs to be reached in order for the break-even order to be activated. A break-even order means that it's going to exit at the same price that it's at the moment. So I'm going to force this to be triggered. So I'm going to say the break-even floor amount, I'm going to set it to 10 cents, which it's already been met. You know, we entered at 61.53. We are already like 16 cents above that. So I'm going to set the minimum profit to 10 cents, but then let's just do that and then click OK. That's just an activation of the break even. In itself, it knows that what the entry price was, and it knows where to generate that order. I'm going to click OK. Don't want to disable automation, and I'm going to click on close. All right, so we're back on square one. And let's see, let me go back here to the trade manager, and you can see that this is an order to sell 1,000 shares at what price? Here it is, 61.53, exactly what we entered at. So this is the way that the break even works, but you have to supply that minimum profit. It's called the floor amount. So don't forget it. Go over here, go to studies, edit strategies, customize, and we have the break-even floor amount. I set it to 10 cents so that it would trigger it automatically. Let me set it to 0, and that disables it. Currency trailing amount. That's just a trailing, a straight trailing stop. If you want a trailing stop, you can put in an amount in there. Let's put in a 1. Click OK. Don't disable automation. Now, when I look at my trade manager, my stop here is set at 60.68. Where did the price come from? The 60.68? Well, it comes from the chart. It looks at what the highest price was when the order was generated. Notice how it's 61.68, and it sets my exit at $1 below that. That's my trailing stop. So the price needs to go above 61.68 for my stop to be moved. Right now, it's at 60.68 because that's $1 from the current trading price. I mean, we can sit here for a moment and see if that changes, but there we go. It went to 61.69, 1 penny higher. Let's see if that adjusted my strategy, and you can see the price right here. The stop is changed to 60.69. One thing to keep in mind, though, and this is something that I talk about in my automation classes, is that if you're ever using a strategy as an exit kind of thing, like I'm doing here, your computer has to be connected to the internet, and it has to be receiving real-time data, because as you can see, my stop is being calculated here on my computer. I can choose to have that stop be sent to the order execution just to be safe, but by default, everything is controlled here on the computer level. If I wanted to send that over to the exchange, I have to come over here to my strategy. Let's go here to edit strategies, properties for all. And on the automation side, check the box for stop orders here. This way, they are sent to the TradeStation order execution network. If I click OK, don't disable automation and click OK, then the stop is sent. And you can see clearly how that line is added here to my chart. I see the stop at $60 $2.72. And you can see how it's automatically updated with the prices. So the calculation is still happening, but the good thing is that the stop is already on the TradeStation execution network. So if I were to experience a power outage or my computer were to crash, my stop would be in place. All right, let's see. Edit strategies, properties for all, not properties for all, customize. That's the one that gives us access to these parameters. We also can set a percent trailing. The percent trail has a floor amount, and we can set the floor amount to, again, 10 cents, so that the floor amount, that's an activation floor amount. And from there, it's going to calculate a percentage here, trailing percent. Let's say our trailing percent is, oh, let's set it to 10%. See what happens if we do this. I'm going to click OK, and then click on close. Now, this is interesting that it's happening to me, because now it says an open order exists. Do you want to cancel the order? This was the order that had been generated for my trailing stop, this one right here, the one we entered. So the fact that we chose to send that order to the execution network forces the strategy to ask you, what is it that you want to do? You want to keep that order, or you want to cancel? I want to choose to cancel the order. And now we have a stop in place right there. Order filled. It was a little tight, so we got filled. And I think the way that it works, if it's 10 cents, 10%, 10%. The problem with a percentage like that is it's not a 10% of the value of the stock. You know, the stock is trading at $62. In 10% of $62, we're talking about $6.20, right? So clearly the stop was not set at $6.20 away from that price. It used, you know, the profit and loss that you had achieved at the floor amount. So it's looking at a 10% of the total profit. So in this case, let's see what happened here. We got in, we bought the 1,000 shares at 61.53, and notice that it sold at 61.71. The reason is because it activates the trailing stop at 10 cents, and 10 cents is just $100. From the entry price, it was 61.63. And as soon as it starts going up, it just calculates a 10% of the maximum profit. So it was a little bit too tight. So when it reached the high of 61.74, my profit was close to $200. And 10% of $200, we're talking about $20. That in reality, $20 is what, 2 penny movement? That's exactly what happened. As soon as it dropped 2 pennies, it took us out. So that's why we saw that an immediate execution of that exit when we were looking at this strategy. So let's go ahead and take a look at some other strategies here that I'm sure you're going to find interesting. Let me go here to edit strategies, because in addition to this stops and targets, let me go here to customize to see if we covered everything. Oh, we also have an exit on close. So this is the type of strategy that includes all sorts of stops, including a profit target that you can, use at any moment, and I think it's all inclusive in one strategy. Let me go ahead and cancel out of this, remove this strategy. Let me go ahead and enter that single trade one more time. Order filled. So we get filled. Let me show you another strategy. Let me go here to, let's go here to studies, add strategy. For example, this one that's called an ATR target and trail LX. If I were to use the LX right here, this is interesting because it uses a target and a trail. I'm going to click OK, customize, and you can see that the ATR length is using 5 bars, number of ATRs, and number of bars. Let's go ahead and see what's what is it doing here? Because it doesn't give you a lot of detail. It doesn't separate, the stop from the target. I mean, the name does. You have the name of the strategy is ATR target and trail. Target and trail. So number of bars. Let's go to from here, instead of, what I would do is go to the definition. So rather than changing the prices here, let me cancel out. Click OK to this. I'm going to go here to studies, add strategies, ATR. I'm going to go to definition. All right, here it says this strategy calculates a market-based profit target and a delayed trailing stop. The profit target is calculated as the number of ATRs times the average true range of the last ATR length above the entry. The delayed trailing stop will take effect once the number of bars in the position exceeds the number of bars. So it's a delayed trailing stop. A lot of times, if you enter the market and the market is really volatile, a lot of times it hits your stop right away. So this is the way of delaying the stop or the trailing stop by a number of bars. So that num bars is exactly that. The number of bars, the strategy will wait until that trailing stop is generated. But the stop, my question here is, what's the trailing stop based on? Let's go over here and go into the easy language of this. All right, so target price for the long entry is entry price plus the ATR times the number of ATR. So that's pretty clear, right? You get an average true range, multiply by a number of factors, number of ATRs, and then you add it on to the entry price, and that's your profit target. And the cell next bar at target price limit, next bar at low stop. So in this case, the stop bars, and there was a number of bars. Setting the stop at the low of the bar. Let's go ahead and turn it on and see what happens. I'm going to go here to the strategy. Let me go to studies, edit strategies, properties for all. Remember that we need to adopt the real world position. And I'm going to turn automation on. You don't have to turn off confirmations if you don't want to. I'm turning it off just because I don't want those pop-ups, but you can see the assume right here. Now let's go ahead and take a look at the trade manager. So in the trade manager, we have no orders generated. And the reason for that, in this particular case, the way that the easy language is written, this is calculated on the close of every bar. So let me turn my strategy into a 1 minute to see if we have any action. A lot of those exits sometimes are generated at the close of the bar. Let's go ahead and see. Here we go. Okay, here we have the two orders. Oh, we just got filled. The ATR. I should have figured, the ATR calculation on a 1 minute bar, it's very small. So that's why our trailing stop was activated immediately. But you can see that the first order was a limit at 61.74. That's our target. But then a stop was generated when it recalculated and it got us out at 61.66. Let's go ahead and try that one more time. I'm going to go and enter a trade of 1,000. And this time I'm going to go to edit strategies. I'm going to customize this number of ATRs. I may set it to 10. And the stop is going to be at the low. So let's go ahead and do that. Let's go to properties for all to make sure that we are adopting. We are. And let's click on close. All right. So now you can see how the target is all the way up here. But it's going to wait 5 bars until the actual stop is generated. So let's go here to the trade manager. The only active order that I have is the one to sell at 61.93 because we asked it to calculate, the ATR, but multiplied by 10. That's why it's up here, the target. So if we wait 5 minutes, which is the number of bars that the strategy will wait until a stop is generated at the low of the bar. So pretty cool, huh? So I did want to, introduce this concept of exit strategy components. I don't see a lot of questions, so I'm going to assume that it was clear. But if you have any questions, this would be your time to ask them. I wanted to give you an overview of the strategy components that are built into TradeStation, and encourage everyone here to take a look at what's built into the platform. Our team of easy language specialists have created a collection of strategy exit components that are part of the platform that you can evaluate and see how they're written. But the best part is that you can implement them on your own strategies, because that's the purpose, just to use them to build on top of them. TradeStation is not in the business of providing you, a winning strategy. In fact, as a broker, we cannot make any sort of recommendations, but we can provide you tools and ideas that you can put together and develop a strategy of your own. This is used with Walk Forward Optimizer. Fernando, this particular strategy that we just used, we're just modifying parameters. We're not even touching optimization yet. I do a few classes on optimization. Optimization is the one that's built into the TradeStation platform, and a little bit more advanced when we go into the Walk Forward Optimizer. But if your question is about if you can use this sort of idea and test it in the Walk Forward Optimizer, for sure, that's something you can do. Steve is asking, so what happens if you set target based on number times the ATR and then change the time interval? Does target change accordingly? Yes, it does. Great question, Steve. Remember that the strategy that I have here on the chart, of course, is actively monitoring the price of Coca-Cola and doing the calculations. Right now, my stop is at 61.93, but if I change the time frame, let's say to daily, and don't disable automation, it's going to ask me, okay, what do I do with that order? Do I cancel it? I'm going to say cancel the order and wait until the strategy recalculates. I'm going to have to wait 1 bar for the strategy to recalculate, and I should have a profit target and a stop loss. Let's wait the 30 seconds that, if you look at the time here on my TradeStation, you see 11:53. Actually, this is a daily bar. So let me go back here to, let's go to a 5-minute instead. Okay, so there we go. So that's the new target here, 62.29. You can see that it recalculated and it submitted that order as a target. You can see that the price is a little higher because we're using a higher time frame, so the calculation of the ATR does change. All right. Well, guys and gals, thank you so much for joining me today. This is the type of content that we do or that we cover here in Masterclass. We dive deeper into the TradeStation technology, making sure that you guys are comfortable with it and can leverage the functionality or the technology to make your trading more efficient. So thank you guys for being here. I'm getting another question here from Scott. And an exit be set on a specific number of days, like 5 days, without using a strategy. Number of days is not something we have in I'm just trying to think here, because we do have a time activation rule, but the time activation rule only works on the current trading session. Once you go into the next, it doesn't give you the ability to say, I want to exit, in 5 days from now. So the only way that you can do that, Scott, is using a strategy. So in the strategy lineup, if I go here to add strategy, you're going to find one that's called, I know it's somewhere. I know that there's a reserved word called bars since entry, but I don't have it. We have a dedicated strategy that exits after a number of days. Do you know of any strategies, Scott? Maybe you already are using. Your question was if you can do it without a strategy, and the answer is no. So I'm not sure if you know the strategy name that parabolic percent. Is it days since entry? Dollar trailing entry bar. No, not days since entry. Gap down. If anybody knows the name. But there is a strategy, I believe, that exits after a number of days. And if there isn't, it's something that we can create very easily. So if that's something you want to have, the time exit bars. So this is the number of bars. This is the time exit and counts the number of bars. That could be a solution, you know. If you're on a daily chart, you can say, well, exit after 5 bars. That would be after 5 days. Right? But TradeStation has a way of counting the number of bars since entry. All right. So thank you guys for joining me today. I really appreciate you guys taking time out of your schedules to be here. Tomorrow, we're going to do our getting started at 10 a.m. in the morning Eastern time. Also, another opportunity if you're getting started with TradeStation to ask questions relevant to the technology. So hope to see you there if you have any basic, TradeStation questions. If not, I'll see you next time. Thank you for joining us today, and I'll see you in our next class. Goodbye, everyone.